The shooting star pattern occurs when a security opens strongly, moves higher, but then falls back and ends up closing near or lower than the opening price. The candle should therefore have a long upper shadow, close near its lows, and it should occur in an uptrend. So the shooting star is a signal that buyers have bought the market up, but they've been overpowered by the sellers. When this occurs in an uptrend, it's a signal that momentum is waning and a reversal could be about to start. Thus, when a shooting star occurs, it's a signal to sell the market or go short. It's a potential sign of a market top. And here's an example of a shooting star pattern in the Kiwi dollar currency pair. In a downward trend, the shooting star is an inverted hammer. So it should be interesting to see how it performs on our data. So we've written the shooting star formula down into code. Now we can take a look at the tables of results to see how it performs. So looking at the first table of results, we can see the average profit or loss from shorting a shooting star candle pattern and then holding the trade for one whole day. So you can see that this pattern has lost money overall. Shorting a shooting star produced an average loss of 0.14% across our 21 markets, with a 44% win rate, and an average loss of 0.09% on stocks, with a win rate of 45%. These results were not much better with a 3-day holding period, where we saw losses for both tests. So, shorting a shooting star and holding the trade for 3 days does not produce very good results, as is clearly shown. And this is repeated with a 5-day holding period, and the results are in fact at their worst with a 10-day holding period. Shorting a shooting star pattern on the close and holding the trade for 10 days produced an average loss of minus 0.28% across our 21 markets and an average loss of 0.34% in stocks with a win rate of 44%. And this was from over 4,000 separate signals. So the results are pretty conclusive. Shorting the shooting star pattern on a daily chart is clearly a losing signal. It lost money across all time frames and most markets. In a way, you wouldn't really expect the shooting star to do that well in stocks, especially with a 10-day time frame, because stocks tend to go up and short trades are never as profitable as long trades. But anyway, the results are not good for the shooting star. Let's move on.